Welcome to this deep dive. We're looking at the first quarter 2025 financial results today. Yeah, and some of the commentary around them. We've got two big names, Johnson & Johnson and Citigroup.
Right, and we've gathered quite a bit of info. For J&J, we have their initial release for March, plus the full transcript and slides from their April 15th call.
And for Citigroup, it's similar Q1 reports from places like TipRanks, PYMNTS, A-Invest, Investopedia, all dated April 15th, plus their earnings call transcript too.
So the mission here for everyone listening is really to pull out the key numbers, the key insights.
Exactly. Understand what's driving their performance, what they're saying about the future, and, what it all might mean.
Okay, let's dive straight into Johnson & Johnson then. Their Q1. Well, it seemed like a bit of a mixed bag initially, but maybe not. What was your first take?
Well, what really stands out is how they manage that Stelara biosimilar competition. It's a huge drug for them.
Yeah, the first wave hitting them.
Right. And despite that, their worldwide sales, operationally, were still up 4.2%. That's $21.9 billion. And operational meaning, just remind us.
It strips out the currency effects, so you get a clearer look at the underlying business performance.
Got it. So 4.2% growth, even with Stelara headwinds.
Yeah, and they actually quantified that headwind, about 810 basis points. That's a big drag.
Wow. So without that, growth would have been much higher.
Significantly higher. Even with it, their reported sales, including currency impacts, grew 2.4%, still respectable.
And they didn't just meet expectations on earnings, right? They beat them.
They did. Adjusted EPS came in at $2.77. The forecast was around $2.58, so that's a good beat, about 7.4%.
Look, pre-GAAP number was way higher.
Yeah, $4.54. But that was boosted significantly by a reversal linked to that proposed talc settlement. So the adjusted number is probably a better reflection of ongoing operations.
Okay. Net earnings overall?
$11 billion for the quarter. Pretty substantial.
And geographically, how did the U.S. compare to international?
U.S. sales were stronger, up 5.9%. International grew too, but more modestly, 2.1%.
So it really feels like the diversity of J&J's business helped them here. The Stelara hit was real, but other parts picked up the slack.
Absolutely. Let's dig into that a bit. The Innovative Medicine division, their pharma side.
Right. How did that specific division do?
It mirrored the overall operational growth, actually, up 4.2% to $13.9 billion.
And what were the stars there? What products really drove that?
Several key drugs had really strong quarters. Darzalex for myeloma was up 22.5%. Huge growth.
22.5%. Okay.
Trem-FYA, immunology drug, up 20.1%. Erlata for prostate cancer, up 14.6%.
Those are big numbers for established drugs.
They are. And then you have the newer therapies, Carvyu-YKTI, the cell therapy, more than doubled its sales.
Wow.
And Tecvayli and Talvey, also for multiple myeloma, saw really significant growth from their recent launches.
Okay. Anything else?
Yeah, the combination of Rybrevant plus LAZ-LUZ, that's for a specific type of lung cancer, also saw over 100% growth since it launched.
So oncology and immunology are clearly powerhouses for them right now.
Definitely seems that way.
Now back to Stelara for a sec. You mentioned biosimilars and the Part D redesign impacting sales. Can you elaborate on that Part D part?
Sure. The Part D redesign refers to changes in the Medicare prescription drug benefit in the U.S. It affects things like cost sharing for patients and negotiations. It can put pressure on pricing and access for certain drugs.
So it's another factor alongside the direct competition.
Exactly. It adds another layer of complexity. But like you said, the growth in those other brands really shows the depth they have.
Were there any updates on pipeline drugs that caught your eye? Anything exciting coming down the pike?
Oh, definitely. Quite a few things. On Darzalex, besides the sales, they mentioned continued share gains across, all stages of myeloma treatment. Plus, they got an expanded approval in Europe.
Okay, broader reach there.
Right. And that Rybrevant plus LAZ-LUZE combo we mentioned, they highlighted data showing a significant overall survival benefit in first-line lung cancer patients.
That sounds like a big deal.
It is. They're positioning it to become the new standard of care there. And they also got a subcutaneous version and under-the-skin injection approved in Europe. That makes it easier for patients.
Easier administration, yeah. And Trem-FYA. You mentioned strong growth, but anything new?
Big news there. They launched it for ulcerative colitis and just got FDA approval for Crohn's disease.
Okay, expanding its uses.
And the Crohn's data apparently showed it was superior to Stelara on certain key measures, like endoscopic endpoints.
Directly challenging Stelara.
Exactly. And they're talking really big numbers for Trem-FYA now. They see potential for it to be a $10 billion plus product eventually.
10 billion. Wow, okay. That's a high bar.
It certainly is. Shows their confidence.
Any other pipeline highlights?
Yeah, a couple more. Caplovida, that's the drug they got with the intracellular therapies acquisition. They submitted an application to the FDA for its use in major depressive disorder as an add-on treatment.
Okay, when might we see that?
Potential approval maybe later this year. They shared positive phase 3 data, so that looks promising. And then there's icotrokinra. It's an investigational oral drug for plaque psoriasis targeting the IL-23 pathway.
Oral is usually preferred over injections if it works well.
Right, and the phase 3 results showed really impressive skin clearance. They're even planning a head-to-head study against Stelara.
Bold move.
Yeah. And interestingly, this drug also showed positive phase 2b results in ulcerative colitis, so potential beyond psoriasis.
So quite a bit brewing in innovative medicine.
Definitely. And they actually guided for stronger operational sales growth in that division in the second half of the year.
Okay, let's switch over to their medtech side. How did that division perform in Q1?
MedTech also had positive growth. Operational sales were up 4.1%, reaching $8.0 billion. Recorded sales up 2.5%.
Where is the strength within medtech?
Biomed, which they acquired heart recovery tech that grew 14%. Strong result.
Yeah.
Shockwave Medical, another acquisition focused on intravascular lithotripsy, is now part of the mix and contributing. Surgical Vision did well, up 6.2%. And their wound closure business was solid, too.
But I recall seeing orthopedics was down.
That's right. Orthopedics saw a decline, 3.1% operationally.
What was behind that? Just market trends.
They pointed to a few specific things. One was a tough comparison because of a revenue recognition change in the prior year. Also, fewer selling days in Q1 this year.
Calendar effects.
Exactly.
Right.
And they also mentioned some disruption from their ongoing sort of transformation efforts within the orthopedics business itself.
So some one-off factors, maybe?
Partially, yeah. But they did also acknowledge underlying competitive pressures, especially in spine and sports medicine.
Okay. But they expect improvement.
They do. They express confidence they'll see improvement in the second half, mainly driven by new product launches they have planned.
Got it. What about electrophysiology, heart rhythm treatments?
That was roughly flat. They cited competition again, and also some inventory dynamics in Asia compared to last year.
So a bit more challenging there.
Seems so. But similar to innovative medicine and orthopedics, they are expecting overall med tech growth to accelerate in the back half of the year.
Okay. So looking at J&J overall for the rest of 2025, what's their outlook? Did they change guidance?
They did raise their full-year operational sales guidance by $700 million.
And that was because of?
Primarily due to that intracellular therapies acquisition, bringing Caplovida into the fold. So now they expect operational sales growth between 3.3% and 4.3% for the year.
Okay. What about earnings guidance? Did that go up too?
Interestingly, no. They maintained their adjusted reported EPS guidance.
Even with the higher sales forecast?
Yeah. They mentioned the dilution from the acquisition, basically, more shares outstanding, and also some negative impact from tariffs offsetting the higher sales contribution.
Tariffs. We'll come back to that. They also announced some big investments, right?
Huge investments, over $55 billion planned in the U.S. over the next 4 years.
$55 billion. Wow. Where's that going?
Manufacturing, R&D, technology, includes plans for 4 new manufacturing facilities in the U.S.
That's a major commitment to U.S. operations.
Absolutely. And on top of that, they raised their dividend again, 63rd consecutive year. 63rd. Incredible consistency.
Yeah, a 4.8% increase this time.
Right.
The message from the executives was clear. They see 2025 as a catalyst year, setting up for accelerated growth ahead.
Okay. Before we move to Citi, any major risks J&J called out?
The usual suspects, mostly. Ongoing Stelara biosimilar competition, definitely number one. Global economic uncertainty. Regulatory hurdles for new drugs.
Currency swings.
Yep. Currency fluctuations, potential supply chain issues, and, as we mentioned, tariffs particularly hitting the medtech side.
Right. Okay, a comprehensive picture for J&J.